Hi guys, so welcome back. Now we're in chapter 2 and we will be looking at job. Here it is. Chapter 2 is all about job order costing, okay? So first off, before we get into job order costing, we need to understand, some foundation, some need to know information. So one of those terms that we need to understand is cost accounting system. Now, what a cost accounting system is, it measures, record, and report product costs. Now, if you have ever worked in manufacturing or been part of making a product, that is very important to you because it allows managers or supervisors to understand not only the cost, but it allows them to set the product pricing. It allows them to control operation and develop financial statements. Because again, when you're dealing with materials, whether they're finished or in between or what have you, all of those different types of materials go onto the balance sheet, or they may also flow through your income statement, okay? So cost accounting system measures, record, and report product costs. Now, to further break that down, there are two main types of cost accounting systems that a manufacturing operation could employ, either job order or process costing. So that's where we are now. So what's the difference between the two? Well, process costing assigns product costs for each manufacturing department or process. Now, if you're like, that didn't quite make sense to me, no worries. Chapter 3 is all dedicated to process costing. Okay, so we're just introducing the terminology and then we'll get into details in the following chapter. Process costing also is a system for companies with indistinguishable products. So those things include, or those products include oil refineries, paper products, food processors, things of that nature. As I mentioned before, chapter 3 is all dedicated to process costing. But what the focus of this particular chapter will be all about is job order costing. Now, job order costing provides product costs for each quantity of product manufactured, also known as a job, right? So it's a system for companies that manufacture custom products, batches of similar product. So maybe think of like a Lamborghini with like pink seats or something of that nature, or a custom design, or you can even do like 20 yellow guitars, right? It's very unique, and if it has special details on it, then that's what we mean by products, batches of similar products, okay? All right, so let's talk about what this process look like under job order costing, okay? All right, so while jobs are in the manufacturing process, they stay within the work in process inventory. So before I go there, I want to make sure we understand the flow of things. That's probably the most important concept to get when we're looking at a job order costing, okay? So usually you have a sale from, or you get a sale, you strike a deal with a customer, right? So if we're Fender, maybe we're going to sell to Guitar Center, or maybe there are other customers that they may have, right? And so Guitar Center and say maybe a Fender will strike a deal for say 50 yellow guitars, right? So from there, once that deal is strike, there is a job that is created. Okay, so I'm gonna write on this particular screen. Okay, so say for instance, we're gonna have 20 yellow guitars, right? A job has officially been created between Fender and say Guitar Center, right? And the job is to create these 20 yellow guitars. Now, in order to create these 20 yellow job, let's call this job number 61. Yeah. So in order to fulfill this job number 61, which includes 20 yellow guitars, you're going to need some specific items, right? So number one, you're going to need some materials, right? Like if you're manufacturing a guitar, you can't just pull it out of thin air, of course not, right? So first off, you're going to need some materials, right? So maybe some wood and screws and frets and strings, right? And you want to get all of that information or all of that material from the storeroom or the warehouse, okay? So now you're going to have some direct materials. Now, once you have some direct materials, you're also going to need some labor, right? Like if you have materials but no labor, no machinery to get it done, it would just be it would not be a job. Let's be real, okay? So once it gets its materials, then this job is now shifted into an account called work in process. It's here. Right? And so it's a work in process. By definition, work in process means, hey, I am applying direct materials and labor and some utilities and machinery and all of that to this to create or innovate a product, right? So when you start manufacturing these 20 yellow guitars, it becomes work in process. And in that process, you're applying the labor that's needed, the overhead that's needed. And again, overhead is machinery, depreciation, utilities, power, things of that nature, right? And so then once you have finished, or once everyone has done their part, similar to the video we saw, once that 20 guitars have moved through all of those different departments and they've all added their direct labor, materials, and factory overhead, the job is finished, and then it's moved into finished goods, right? And finished goods just means that, hey, I've finished applying all that is needed to make this a product, right? So now once it becomes a finished goods, it's stored in a warehouse, and once it's stored in a warehouse, we are basically waiting for it to get sold officially, or for maybe your guitar center to come pick it up or something of that nature. Okay, so hopefully that made sense to you as it goes through this process. So it's very important that you understand the flow of a job, right? So it goes from, you need some materials, and then it becomes work in process, finished goods, on cost of goods sold, once it's sold. So now we're going to move into some terminology that you may or may not remember from Accounting 1A. Whoop, whoop, you made it this far, right? So we're going to talk for a second about perpetual inventory. Now, I don't know how much you guys remember or how much you guys liked Accounting 1A, but we talked about perpetual inventory in detail when we looked at maybe chapter 5, which was merchandising businesses, and also when we talked about inventories. I know a lot of you guys maybe not like first in, first out, LIFO, and weighted average, but we're not going to do that here. We just need to understand or remember the concept for a second. So perpetual inventories accounts just says that every time we acquire new materials, we're going to update our inventory. Every time we apply those materials to a job, our inventory is going to be updated. Every time we start working a new job or we're finishing a job, it's going to move fluidly through each of these channels. Like our inventory systems in each of those accounts will constantly be updated, okay? So let's talk about a general ledger. So for a second, remember a general ledger is just the, I want to say the controlling account. Now, I don't want to make this into a big deal, but let's say, for instance, we have all of these different accounts that you see now. So under our materials inventory account, for instance, materials inventory would be considered a general ledger account. Now, if I was to, double click, I guess, on my materials inventory, what I would see is all of my materials within my inventory, if that makes sense. So for us, as we study guitars and things of that nature, our materials would include wood. And so imagine if I double click, there was maybe a plus sign here, so you can expand this. So imagine if I double click this, what would happen was all of this would show up. And because I need all of this material, it would show that I have hickory, I would have oak, maple, all of those different types of inventory or different inventory in my accounts, right? And so usually when you have a materials inventory account, if that's your controlling account, you're going to have a sum total of, say, maybe $4 million, right? And if I was to double click on my materials inventory, then this breakdown would show me well, okay, if I have $4 million in inventory in total, then maybe 1 million is from here, maybe another million is for oak, and then maybe another 2 million is for maple, right? So the detailed is when you expand that account. But if I was to collapse this, my materials inventory amount, the controlling account would be $4 million. The same could be said for work in process. The work in process inventory account is the general account. But what if I was to expand this account, I would see all of the jobs that are currently being worked on at the period. That would include job number 71, job number 72, so forth and so on. Moving on to finished goods, the same thing could be said. If I finished goods inventory will capture all of my jobs that I have finished. So here in my finished goods inventory, you will see job number 69, 70, and whatever other jobs that were completed, okay? Hopefully that made a little bit of sense. Just remember that these are your accounts that you would see on maybe the balance sheet, right? And then when you expand it, this would tell you, okay, what specifically are in each of these accounts. That's how you could see it, okay? All right, so with that, I'm gonna go ahead and stop this video. And in the next video, we're gonna pick up on our topic, and we're gonna now dive into more so of chapter 2, talking about job order costing, okay?